This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pashradis. Thanks for joining us at XM.com. The nonstop rally in global bond yields has started to infect other asset classes, bringing the party in stock markets to a halt and breathing some life back into the devastated US dollar. There hasn't been any major news, so this repricing appears to be driven by expectations for a cannon barrage of spending from Congress that blows up the federal deficit and powers up the global recovery. The yield on 10-year treasuries has crossed the Rubicon and is trading at a fresh one-year high, with real rates also moving higher as nominal yields climb faster than inflation expectations. This has grave implications for stock markets. The shockwaves have reached the FX arena as well, with the yen being the main casualty. Since the Bank of Japan keeps a ceiling on Japanese bond yields, the yen suffers when global yields rise, as interest rate differentials widen against it. The greenback is no longer trading exclusively as a defensive asset and has instead started reacting to U.S. economic fundamentals. It fell a couple of weeks back when U.S. inflation data disappointed, and it briefly soared last week in the aftermath of surprisingly strong retail sales. Staying in the FX sphere, the British pound and the Australian dollar have been the biggest winners lately. The pound has been on a rampage in recent weeks, showing a remarkable ability to absorb bad news without even a scratch as markets focus on the better days ahead. The incredible pace of vaccinations continues, allowing the government to reopen the economy without the risk of having to shut down again, in contrast to the euro area. Meanwhile, the latest PMI business survey suggests business activity may have already started to turn the corner. Euro sterling has taken heavy fire as a result. The odd one out has been gold. Rising real rates accompanied by a firmer dollar would normally be a death sentence for the yellow metal, but bullion is instead cruising higher on Monday, which suggests it is behaving like a safe haven again. This was today's Daily Market Comment. Thanks for joining us at XM.com.